There is a war happening right now that will determine who controls one of the most important metals on Earth for the next 50 years. It is not being fought with missiles. It is not being fought with sanctions. It is being fought with supply chains, refineries, and offtake agreements that most people have never heard of. And it is happening right now, in real time, while silver sits at $82 and most investors are still arguing about whether the crash to 64 was the end of the bull market. It was not. The crash was a sideshow. The real story is what I'm about to show you. Because what I found when I started digging into where the physical silver is actually flowing, who is buying it, who is losing access to it, and why two superpowers are now racing to secure it, completely changed how I think about this metal. And I think by the end of this video, it will change how you think about it too. Welcome to the Hidden Economy. If you are new here, hit subscribe. I cover what mainstream financial media refuses to touch. Also, let me know in the comments where you're watching this video from, because I want to know how many people in this community see what is actually happening beneath the surface. If you have been following this series, you already know more than 99% of investors about what is really driving silver. If this is your first video, welcome. You are about to see something that will change how you look at this metal forever. Let me start with a question that nobody seems to be asking. Where does silver come from before it reaches the exchanges? Before it shows up as a number on your screen? Before COMEX reports it as inventory? Before London tracks it in their vaults? Where does the physical metal originate? Because the answer to that question is the key to everything I'm about to tell you. The answer is Latin America. Mexico, Peru, Bolivia, Chile, and Argentina together produce the majority of the world's mined silver. These countries are ground zero for global silver supply. Mexico alone produces roughly 200 million ounces per year, making it the single largest silver-producing nation on Earth, although Peru follows close behind. Together, these two countries account for nearly 40% of all mined silver globally. And for the past 5 years, while most investors were focused on price charts and futures contracts, China was quietly executing one of the most aggressive commodity acquisition strategies in modern history. And I missed it, I will be honest with you. I did not see this until recently. But once I saw it, I could not unsee it. Here's what China was doing. Instead of buying silver on open exchanges like COMEX or the LBMA in London, where prices are transparent and everyone can compete, China went directly to the source. They went to the mines in Latin America and signed long-term offtake agreements. These are contracts where China agrees to buy the silver in its raw form, either as concentrate or as doré, which is a semi-refined bar that still needs further processing directly from the mine before it ever reaches a public exchange. Think about what that means. The silver was being purchased before it entered the global market, before price discovery, before any other buyer even had a chance to bid on it. China was acquiring the metal upstream at the source and routing it directly into their own processing and refining system. The metal never showed up on COMEX. It never appeared in London vault reports. It effectively vanished from the visible global supply chain. I want you to visualize the flow because it matters. A mine in Mexico extracts silver ore. Normally, that ore gets refined locally or shipped to a refinery in the US or Europe, where it becomes finished silver that enters the global market. Everyone sees it. Everyone can bid on it. Price discovery happens. The system works. But China inserted itself before that step. They said to the mine, we will buy your concentrate directly. We will refine it ourselves in China, and we will pay you more than anyone else will. So the silver left Mexico, went straight to a Chinese refinery, got processed inside China, and never touched a Western exchange. Multiply that by hundreds of mines across 5 countries over 5 years. That is not a trade strategy. That is an empire strategy. And they were smart about it. They offered Latin American producers higher prices and long-term certainty. If you are a mine operator in Peru and someone guarantees to buy your entire output for the next 5 years at a premium, you take that deal every time. But the cumulative effect of hundreds of these deals over 5 years is devastating. Because the visible supply of silver, the stuff that shows up on exchanges and in inventory reports, got thinner and thinner and thinner, and nobody in the West seemed to notice or care. Stay with me because this is where the story gets insane. Something changed. And I believe it changed sometime in the second half of 2025. The United States woke up. And when I say the United States, I do not mean a politician gave a speech. I mean the physical supply chain started to shift. U.S. refiners began receiving unusually large volumes of silver concentrate from Latin America. So much material that refining capacity in the United States became overwhelmed. Metal was arriving faster than it could be processed. Let me repeat that because it is important. Silver was flowing into U.S. refineries faster than they could physically refine it. That is not a price signal, that is a supply signal. It means someone, or some entity, decided that Latin American silver was going to flow into the United States instead of to China. Historically, much of this metal would have been refined and shipped to London or forwarded to Asia. Instead, it is now staying in the Western Hemisphere. The flow has reversed, and the reversal is not subtle. It is dramatic. What I believe is happening is that the United States is now doing in Latin America exactly what China had been doing for 5 years, securing offtake directly from producers, locking up supply before it reaches open markets, but doing it faster and with greater urgency. And here's the critical difference. The United States is not just buying silver. The United States is squeezing China out of the Western Hemisphere's supply chain. This is not a trade. This is a resource war. And I need to tell you about something that happened on Black Friday 2025 because it perfectly illustrates how this war is being fought. On that day, JP Morgan, the largest bullion bank on earth, effectively pulled silver off the market. They withdrew available supply. What followed was chaos. Someone in China who was structurally short silver, meaning they had obligations to deliver metal they did not physically possess, was forced to cover their position aggressively. That was not a trade. That was a scramble. A desperate scramble to find physical silver that was no longer available through normal channels. And when the largest bank in America removes silver from the market and the largest buyer in Asia is forced into a panic cover, you're not looking at normal market dynamics. You are looking at financial warfare. Let me paint you a picture of what the Monroe Doctrine looks like in 2026. In 1823, President James Monroe declared that the Western Hemisphere was off limits to European colonial powers. It was America saying, "This is our backyard." 200 years later, the same principle is being reasserted, but this time it is not about colonies. It is about commodities. The United States is effectively telling China that Latin American silver supply is within the U.S. sphere of influence, and the mechanism is not military. It is commercial. Secure the offtake, overwhelm the refineries, control the flow, and let the market do the rest. Now I want to show you a data point that genuinely blew my mind when I first came across it. And honestly, if you only remember one thing from this entire video, make it this. Because this is the moment where the picture becomes crystal clear. In any commodity market, when big buyers acquire material, they hedge. They lock in a price to protect themselves from volatility. This is what every textbook says should happen. This is what has always happened. Until now, the hedging has disappeared. Commercial hedging activity in the silver market has declined materially. And once you understand what that means, you will never look at this market the same way. Here is why. A buyer who hedges cares about price. A buyer who does not hedge cares about one thing only: possession. They want the metal. They do not care what it costs tomorrow. They do not care if it drops 20% next week. They want it in their vault, in their possession, under their control. Period. The disappearance of hedging is the single most bullish structural signal I have ever seen in any commodity. It tells you that whoever is buying silver right now is not a trader, not a speculator, not a hedge fund running a momentum play. This is strategic, long-term, nation-state level accumulation. The kind where price is irrelevant and access is everything. And the market is registering this. Prices move before policy. Let me say that again, because it is one of the most important things I will say in this entire video. Prices move before policy. The market is not waiting for an executive order or a tariff announcement or a press conference. The market is watching the physical flows. It is watching the hedging data. It is watching the inventory reports. And it is pricing in a future where access to silver is more restricted, more contested, and more geopolitically sensitive than at any point in modern history. Now here is where China's desperation becomes visible. And this is the part where I need you to put your coffee down and really pay attention. Because as their access to Latin American raw silver tightens, their behavior has shifted. Reports have surfaced of Chinese buyers approaching producers and refiners in Latin America and offering to buy finished silver, not concentrate, not doré, but fully refined. Delivery-ready silver at $8 per ounce above spot price. $8 above spot. Do you understand what that means? At $82 silver, they are willing to pay $90 for physical metal. That is not normal buying behavior. That is panic buying. That is a buyer who is losing access to supply and is willing to pay whatever it takes to get their hands on the metal. Think about it from China's perspective. For 5 years, they controlled the upstream. They bought the raw material at the source and processed it themselves. That pipeline is now being disrupted. So what do you do when you lose access to the raw material? You go after the finished product, and you pay a massive premium to get it. That is exactly what is happening. China is bidding for finished silver at prices that make no sense unless you understand that their supply chain is being squeezed. And at the same time, China announced that it will restrict silver exports starting January 1st, 2026. I covered this in my first video on this channel, but now I understand the full picture. China is not restricting exports because they want to manipulate the market. They are restricting exports because they are losing the supply war and they need to protect what they have left. Export controls are not offensive moves. They are defensive moves. They are the moves you make when you are losing. Now let me connect this to something that most people completely misunderstand about tariffs. There is a law in the United States called Section 232, which allows the government to impose tariffs on imports that threaten national security. Most people think tariffs come first and then prices move, but that is backwards. In reality, the supply accumulation happens first, then prices move to reflect the new reality, and then only after domestic supply chains are deemed sufficient, tariffs get announced to lock in the advantage. You do not tariff what you still need. You tariff what you already control. That is why silver prices can rise sharply without any official announcement. The market is front-running the policy. It is pricing in a future where the United States controls hemispheric silver supply and uses tariffs to formalize what the physical flows already show. JP Morgan and Goldman Sachs have both publicly flagged the risks of Section 232 implementation in metals. These are not conspiracy theorists. These are the largest investment banks on earth telling their clients to prepare for a world where metal flows get reshored and tariffs become part of the pricing structure. When JP Morgan tells you something is coming, you should probably listen. And there is one more layer to this that I think most people are missing entirely. And honestly, this is the part that keeps me up at night. It is the layer that makes this a truly global story, not just a US versus China story. Silver is becoming collateral in a de-dollarizing world. Here is what I mean in plain English. Right now, the global financial system runs on trust in the US dollar, but that trust is eroding. BRICS nations are building alternative payment systems. Central banks are dumping treasuries and buying gold at record pace. The question everyone is asking behind closed doors is simple. If the dollar loses its dominance, what backs the new system? Gold is the obvious answer. But here's the problem. There's not enough unencumbered gold to go around. Every central bank wants it. Every sovereign wealth fund is hoarding it. So what is the next asset in line? What is tangible, universally accepted, divisible, and already embedded in every industrial supply chain on Earth? Silver, not as money you spend at the store, as collateral that sits on a balance sheet and backs real obligations. Think of it like the down payment on a house. You do not spend it, but without it, the deal does not happen. That is what silver is becoming in the new financial architecture, and that is exactly how I believe China views it, not as a retail investment, as a strategic balance sheet asset. And that creates a type of demand that has never existed in the silver market before. Here is why this matters for price, and I mean really matters. When silver was just an industrial metal and a precious metal for investors, the buyer base was limited. You had industrial users, jewelry makers, and retail investors, maybe a few hedge funds. That is a defined pool of demand against a defined pool of supply. But now add sovereign buyers, add central bank adjacent entities, add BRICS nations building alternative financial infrastructure who need collateral. Add the US government treating silver as a critical mineral. Add the Chinese government implementing export controls. The buyer base has expanded to include the most powerful financial entities on Earth, and the supply has not expanded at all. In fact, it is shrinking. 5 consecutive years of deficit, vaults draining. New mine supply takes 7 to 10 years to come online even if you started today. More buyers, same supply. Shrinking inventories. This is not complicated math. But it is math that most people have not done yet because they are still thinking about silver as a retail trade instead of a geopolitical asset. So let me pull all of this together because I want you to see the complete picture. And if you are still watching at this point, you're about to understand something that puts you ahead of 99% of investors on the planet. I want you to understand why silver at $82 is not expensive. It is not overvalued. It is not a bubble. It is the early stages of a structural repricing driven by forces that have nothing to do with retail speculation or YouTube hype. Think about what is converging right now. At the exact same moment in history, the United States is ripping Latin American silver supply away from China. U.S. refineries are so overwhelmed with incoming metal they cannot process it fast enough. Hedging has vanished because the buyers do not want price protection. They want the metal itself. China is so desperate, they are offering $90 for $82 silver. China is locking down exports because they know they are losing. Section 232 tariffs are being modeled by JP Morgan and Goldman Sachs as a real scenario that would reshape global metal flows overnight. BRICS nations are building a new financial system that needs tangible collateral, and silver is next in line after gold. Central banks are buying gold at record pace, and the available unencumbered gold is shrinking, which pushes collateral demand down to silver. Vaults in New York and Shanghai are draining simultaneously. Lease rates in London are at 4.5%. The market is in extreme backwardation. And supply deficits have now persisted for 5 consecutive years, with no new mine supply coming online for another 7 to 10 years minimum. All of that at the same time. That is not one bullish signal. That is not two. That is every single signal in the physical market, the geopolitical landscape, and the financial system all pointing in the same direction simultaneously. I have never seen this many forces converge on a single asset in my career, and I do not think the market has even begun to price it in. I want to be honest about the risks, because I never present one side without the other. I hold silver. I have skin in this game, and there are things I cannot see clearly yet. How exactly is the U.S. securing Latin American supply? Is this government coordinated or private sector driven? How will China respond? They could escalate with even higher premiums. They could pivot to African and Australian silver assets. They could weaponize their dominance in silver refining, which still processes a massive share of global output. And the timeline is uncertain. This could play out in 6 months or 3 years. Resource wars do not resolve overnight. I also want to address the obvious question. Is silver at $82 already too expensive? Let me reframe that question with what you now know. Silver at $82 is the price at which it trades when Chinese buyers are willing to pay $90 for physical metal. It is the price at which it trades when the United States is reclassifying it as a critical mineral. It is the price at which it trades when London lease rates are at 4.5% and the market is in extreme backwardation. It is the price at which it trades when two superpowers are literally fighting over who controls the supply chain. Is $82 expensive? Or is $82 the market still catching up to a reality that the physical world already knows? I will let you decide. But I know what the data tells me. There's also a scenario that I think very few people are considering. What happens if the United States actually implements Section 232 tariffs on silver? Let me walk you through the mechanics. A 25% tariff on silver imports would immediately create a price premium inside the United States. Domestic silver would trade at a significant markup to international prices. That premium would attract even more supply into the US, accelerating the drain from every other market on Earth. COMEX would become the destination of choice for every producer in the Western Hemisphere. London and Shanghai would see their inventories collapse even faster than they already are. The tariff does not just raise the price, it reshapes the entire global flow of metal. And remember, JP Morgan and Goldman Sachs have both flagged this as a real risk. These are not hypotheticals. These are scenarios that the largest banks in the world are actively modeling. But here is what I do know. The physical flows have changed, the hedging data has changed, China's behavior has changed, US refining volumes have changed, and silver at $82 is sitting at the center of a geopolitical contest between the two largest economies on Earth, both of whom have decided that this metal is critical to their strategic interests. 5 years from now, people will look back at this period and they will not remember the crash from 121 to 64. They will not remember the headlines that said the bull market was over. They will remember this. The moment when silver stopped being a precious metal and became a geopolitical weapon. The moment when two superpowers decided that controlling silver supply was a matter of national security. And the moment when the price on your screen stopped reflecting what silver was worth and started reflecting how badly the most powerful nations on Earth wanted it. I am not telling you to buy silver. I'm not telling you to sell silver. I am showing you what the data tells me. I hold silver. I hold mining stocks. I have skin in this game. And the reason I hold them is because of everything I just told you. Not because of a YouTube thumbnail or a prediction, because the physical flows, the hedging data, the geopolitical positioning, and the inventory data all point in the same direction. And when every signal converges, I pay attention. If you have watched my entire series from the beginning, you now have a complete picture. Video 1 showed you the vaults draining. Video 2 showed you the price pattern that points to $300. Video 3 showed you why the crash was a leverage flush, not a fundamental breakdown. And this video showed you the geopolitical war underneath all of it, the war that is actually driving everything. If this video changed how you think about silver, drop what do you think in the comments. Send this to one person who thinks silver is just a shiny metal with no strategic value. They need to see this. The vaults are draining, the supply chains are flipping, the superpowers are fighting. And silver at $82 does not even begin to reflect what is happening underneath. Here is what I will be watching in the coming weeks, and I want you to watch them with me. Because if this thesis is right, each of these 5 things will confirm it in real time. US refining bottlenecks. If they persist, the supply chain flip is accelerating. Chinese premiums over spot. If they keep climbing from $8 to $10 to $15, the desperation is growing. Section 232 developments. Any whisper from the White House or Commerce Department about silver tariffs, treat it as a fire alarm. COMEX and Shanghai inventories. If the drain accelerates, everything in this series is playing out exactly as the data predicted. And the gold to silver ratio. If gold pushes toward 8,000 and that ratio compresses, the math for $300 silver becomes a fact, not a forecast. Watch those 5 things, and you will see this story unfold before the rest of the world figures out what happened. The story is not over. It is just beginning. And I will be here every week to walk you through it. This is The Hidden Economy. I will see you in the next one.